All right. Good morning, everybody. So we got a lot of Fed speakers around the world this week. Today, it's mainly coming out of Europe. So we got ECB and then Bank of England. Jeffries is going to be late enough in the evening that it'd be somebody else's problem. Not quite sure what to think about this. The Japan 10-year bond didn't trade all day, first time in a month. That continues to be the number one thing I'm looking at for you know getting sideswiped by something that nobody's looking at. That would, to me, that's Japan. Remember, some of the biggest market moves comes from events that we didn't see happening, right? Things that just caught us off guard. So when you look at the wall of worry and everything that's on that list, 9 times out of 10, it's not something from the list that wrecks the market. It's the thing not on the list. So we do have additional auctions today. And other than the auctions and the Fed speakers, we have some manufacturing data too. It's not anticipated to be, really impactful data. It's just one more data point. The big deal is going to be Fed members out there chipping teeth. So we can see Asia had an inside day breakout. They managed to pull all the way back up to the low of the day before closing, but it's still a negative day. It's only 12:30 in London. But so far they're working on an inside day breakout to the upside, and they're setting up for a really nice TRB. This today could be the recovery candle, but it really looks like it's going to be the follow through candle, and that Friday was the recovery candle. Right, so this is a really small TRB setup, not very many candles at all. This really nice recovery off of the lows where they went into the close, and look at today with no wick on the bottom of this thing, and it just ran straight up, pushing on that inside day breakout. And if you start getting into the strat, into this theory of machine gun pivot reversals, as we break above yesterday's high in this setup, it would be triggering all the stops for anybody who was short. Well, when you're short, you buy to close. It adds to the buying, pushes up to the next level. If we can trigger those stops, adds to the buying, pushes up to the next level. It's one of the reasons that a TRB setup is so awesome. Is the breakover day can very often reclaim the top in a single shot. Now we're not there yet, and looking at how late it is for them in the day, probably won't see that kind of follow through, but still the setup is still there. It's definitely one to recognize. We're still inside day in crude. And in Brent. Haven't managed to get a breakout in either one of these yet. Not necessarily a bad thing. We're exporting our inflation around the world to anybody who's got to import energy. Right now, that push in Europe is the one that's really getting my attention. We get a carryover of sentiment and inertia into today's trading to be a nice change of pace. So 10:30, Dallas Fed manufacturing. 11:30, we got auctions. and 1 o'clock we have auction. So after 1 o'clock, thinking about 0 days should be good to go. Those spot gamma levels. So I'm on the weekly chart here. I wanted to kind of just start big picture and talk about how we ended the week in the middle of this range, 4,200, 3,800. And we've been in this thing all year. It sounds more dramatic when you say it that way, right? All year. Forever. 400 points, 3,800 to 4,200. And we closed basically in the middle of the range. We got nothing. And if we got nothing here, we got nothing everywhere else. Right? So we really got to get out of this box. Right now, the number one focus is getting outside of last week's candle. %50 of last week, 39.85. The top end 40.73 and the low end, call it 3,900. So we can see the ADR right now, 1.9%. The ADR half would be 40.46. 100%, that move that I just measured, would be previous week's high, 40.73. And the full ADR would be 40.84. So we can move outside of that range in a single day looking at the ADR. Right now we have an MDP, that's a missed daily pivot. We haven't hit it. It's not my strategy. You can look it up if you want to know more about it. I don't trade it either, by the way. Right now we're inside day breakout. It's not doing too bad. I'd kind of expect to see maybe a little bit of a Busby at this point. Old resistance being tested as new support. Volume is in line. It's not really heavy and it's not too light. It's kind of Goldilocks, right where it needs to be, or right where it should be. 10-day, 30-minute volume profile. We don't necessarily have much of a classic shape at this point. Point of control held, and we're now headed back to the top. Throughout the day today, we're going to lose Monday's candles from 2 weeks ago. That's going to narrow the box up to 30.62 on the bottom. As we progress through the week, if we don't test the lows again, by the time we come in on Monday, we'll have the low end of this profile at 3,900. So that'll be really tight. You're looking at just about a 200-point range in a 10-day time period. That's a lot of compression. Mapping out a 5x5, we do have a VPOC from last week, Friday. $39.50. Imagine that. It's the same old pivots just coming back into play again. If we were to run a 1-week volume profile, I think we'd see a lot of resistance at this 40-40 area. I don't have anything there that I can really point to other than Thursday's high, right? Thursday's high right at that 40-40. 40-40 in the SPX is not necessarily a level that we tend to focus on too much. And yet, if you're looking at, the gamma levels, 40-30, or I mean 40-40 was where the gamma strike and the large gamma levels from spot gamma were at. They're at 40-30 now, but they were 40-40. Just a little odd, right? But it's a level that has been identified, so we run it until it's no longer valid. All right, we're looking at the 10-day moving average here. We're approaching 1% away from the 10-day moving average. That is not overbought or oversold. We haven't moved too far. We expanded, reasonably well, not too bad. We've had consistent expansion, just nice, neat, orderly. It's exactly what we would want to see. It hasn't begun to roll over yet, hasn't even started to top out yet. So plenty of upside opportunity. I wouldn't even begin to consider that we've gone too far until we get at least 2% away, possibly 2.5% away. On Fridays, this box isn't set in stone until after the close. So when we look at it on Friday mornings, we're really looking at it early, not quite knowing, how it's going to end the week. That was last week's box. That's this week's box. So you can see that this week has less volatility than last week. You see it stuck out. That's how much more volatility we had last week. So we're on a daily chart here for a minute. Turned on all the moving averages. You can see there's an orange dotted line there. It's the 50 simple. it's the last moving average overhead. There's nothing else there. So if we get through the 50 simple, it's a straight shot. We have no other moving averages, whether an EMA or an SMA, that is going to be in the way. The thing about Thinkorswim, and there's other brokers that'll do it too. You would go to studies, just type in the word daily, and you get a daily SMA. Set this thing to 50, and it'll plot that for you on the intraday, so that on your 5-minute chart or whatever you happen to use for an intraday chart, you can see that daily moving average on there. For me right now, it's this big orange line. You can see where we hit it on Thursday. We kind of got close to it a few times in the overnight hours. Now we're hitting it and we're interacting with it at 40.30. Last week, we struggled with it. We finally broke through it, tested against it as support until it finally failed, and then rejected it across the bottom of it. So as you can see, we interact with that quite a bit. All right, so looking at SPY, we're not there yet. It's at 40.50. So we got some room left before we get there. For the Qs, there's nothing overhead. It's already through all of the major moving averages. This cyan line is a 4 period. You can use a 3 or 4, it doesn't matter. Looking for a very, very short duration, it's your surge average, right? Something like a 3.8 or a 4.9, 4.8, something like that. Pairs, right? 2 moving averages are better than 1. So 309 is the breakdown point on the Qs. It's a level to the downside to be concerned of for a short duration short. All right, the financials are doing pretty good this morning, 1.5%. Airlines, So tech is really kind of soft this morning. Um, it kind of makes sense. We've seen tech do a lot of the heavy lifting last week. So it would make sense to see tech kind of just not necessarily fall, but quit doing all the hard work. Right now, it's financials and a lot of the other sectors that just weren't getting attention, right? See, um, energy's getting some flow, airlines, industrials. Bitcoin is really not getting much. Semiconductors the same, and communications technology, they're just not really getting much of anything. The thing about looking for any kind of capital rotation is we're also not seeing much in staples either. Staple healthcare. My benchmark is 0.5%, and using that, real estate, materials, that's really where it starts to pick up. The others like healthcare and staples, they're up slightly. They're just not up enough this morning. We need to see more out of those. On the other side, KWEB is down. And bonds, emerging markets, gold. It's kind of an odd mix, right? There's not much here story-wise. Okay, the market didn't like this. Another firebomb getting thrown by the ECB flipped the ES over and has taken it down 10 points already. And I really believe this is going to become more of a focus as we get closer to this, but a lot of these high grade bonds maturing in the next 3 months. Some time today, sweetheart. No, yeah, hey, take your time. Yay. Yeah, I'm not the only one that talks to my computer. Come on, you know you do it too. So there's this line in the sand on KWeb or on KRE that really it's this gap close. Back in 2020, we kind of stabilized on it and that's really been the focus, holding at or above $40, kind of the line in the sand. Um, so as long as we don't get any new crisis out of the financial sector, this should maintain, but it's very likely going to take a long time for the ETF to recover. The names in the ETF, a lot of these have already just flipped, right back up again. Make no mistake about it, there's still a lot of weakness in the financial sector, and I would approach with caution. I know a lot of these have the potential for a really nice replay. or reciprocation move back up. And if you can play it level by level, then sure. But I wouldn't just take it on faith and try to go long on a rebound. Certainly, I would avoid anything that's got more of a V shape to it. V is in Victor. You're going to want something that's got more of a basing pattern to it, like Capital One. Right now, I'm not recommending Capital One by any means, but just talking about the structure here. This more of a base and less of a V. NVIDIA continues to get a lot of flow with their entanglement now in AI. And the way that they had come out talking about it last week, they really didn't get the coverage that I had expected. But, you can see it's running that ride the 9 strategy really nice. Yeah. The green line that I've got here is the 20-period moving average. Markets aren't using moving averages for support and resistance. They're more for a visual on how much of a pullback. Right? It's kind of a visual aid to ask a question: has the pullback pulled back enough, and has the pullback pulled back too far? Right. So getting a retest of the 20 wouldn't have us looking at this as if the 20 is providing some sort of support. Moving averages don't provide support. Just more of an idea of the measured pullback without getting into Fibonacci's or anything else. A simple moving average can kind of give you that visual. Once you've already got a market in an established trend and you've got all of your moving averages fanned out really nice and clean like they are here. Right? You can see how they're uniformly distributing the distance between them. And we got a consistent, persistent run in a single direction. So if you're not in this and you're looking for an opportunity, could focus on a TRB, very short duration trend line breakover, continue this flag, or look for a pullback to test the 10. If that one fails, a pullback to test the 20. If you're looking for a short, I wouldn't try shorting this thing until it's already under the 20. That would be an established short. Right? The difference between a confirmation trader and a trader who trades before confirmation. And it's not about right or wrong, right? If you trade without confirmation, you make more money in the move because you catch the meat of the move, but you'll lose more often. So you have to use those profits to cover the losses that you get from losing more often. If you wait for the established trade you miss the meat of the move and you don't get as many trades. They're less frequent, but you don't lose as often. So it's not right or wrong. It's just what's your style. For a short-term short, if you want to short this aggressively without waiting on confirmation, at least a breakout of yesterday's price to the downside would be a good start, right? If it can at least do that. But right now, NVIDIA is a lot like the excitement around NVIDIA is a lot like the excitement around Tesla, right? Tesla had these diehard enthusiasts who just loved it and would buy the stock on every dip and wanted to own as much of it as they could get. And it was getting massive flows all the time. Right now, NVIDIA is like the darling. So, yeah, I'd short that with caution. Remember, it doesn't have to make sense. Nobody promised that the stock market would be a rational place. All right, Apple's got a really nice little TRB setting up too. May as well take that route. This is a very short duration TRB, 2 candles. We didn't really get the kind of setup I would want to see, but we're primed this morning. And Apple's down slightly. I mentioned on Friday about gaps, right? And if we were gapped up on Monday, I would consider that more bearish for the market than if we were gapped down on Monday. I really wanted to see this gapped down this morning. So it's not to say that we can't continue the rally in the S&P and all that. We can, but I would be more bullish if we had gapped down, like in Apple. Apple is gapped down this morning, and it's not by very much. You know, we're not talking like a really big gap down. Almost all of the names that we want to look at right now is stuck inside of yesterday's price action, so we're not dealing with an inside day breakout yet. We want to see Apple, you know, open kind of slightly down, and then focusing on getting an inside day breakout. Also, then getting this trendline breakover and challenging the high of Thursday. Get through Thursday, you got to challenge the high of Friday, both heavy liquidity zones. And keep in mind, Apple shows up on the Bookmap for free, right? Even if you don't have a subscription to Bookmap, you can still see Apple, Microsoft, and the ES futures. It's one of the reasons that, you know, trading Apple all the time now is preferred to trading, say, SPY all the time. Apple's crazy super liquid, not as liquid as SPY, but still pretty liquid. And you can get it for free on Bookmap. So watch those liquidity zones. A break above the March 22nd offers a pretty fair shot to closing this gap. Way back here, be a little bit of a magnet. That'd be 163.50, just rounding up a little bit. All right, so Microsoft is slightly up this morning, not up by very much. Right now, it's testing the inside day breakout. It hasn't got there yet. It's at 281. And 281.06 would be an inside day breakout. For any of these names that are breaking out in the pre-market, they need to keep it. They can't fade back down again. Right now, on Thinkorswim, Friday is this blue candle. So technically, Microsoft has already broke out of Friday's level, but I'm looking at 201 or 281.06 for the breakout. It's got to get above that. So now that puts us in a really nice setup for Microsoft. If we can fade at the open and bounce off of this 281.57 to perhaps get the momentum or the speed to get through this 281.06, we could have a nice shot to challenge all of this liquidity up here at 283.33. Right, so we're talking about opening kind of up here, a fade and a bounce, and a shot to the upside. If we continue to climb higher in the pre-market and we open, say, somewhere between 281 and 282, and then start to fade, then it really needs to hold this 281. We don't want to see it break below that and look for the springboard off of that. All right, so this morning, Amazon's at $99. I already got the line there. So we're inside day breakout after this. It's not quite a graveyard doji, right? There's not enough of a top there, but it's definitely a doji, whichever one you want to call it, right? Maybe one of those dragonfly dojis, maybe. Doesn't matter. It's a doji. It's an indecision candle. So right now, we really don't want to see Amazon fade back below March 23rd level. It needs to stay inside that body now that it's in there. A break below 98.71 would not be a good thing. Technically speaking, it can still fade back to this 98 and find support and bounce and come back out, but we don't want to see that kind of weakness now that it's already made the run up in the pre-market. There's significant psychological level at $100. If we can get through that, we've still got a lot of trash to get through, a lot of liquidity. A 101, I don't even think we can get to 102, but definitely up to 102, right? This whole $1 area, 101 to 102, it's a big liquidity zone. Think of it like an institution or a fund or a firm is looking to unload a lot of Amazon, and they've just got orders to, sell it if it gets up around this zone. And every time we get up in there, it sells it, sends it back down, but they don't want to crash it, right? Because they want to get out with profit. So they only sell it a little bit. It gets weak, fades back down, catches some support, comes back up, triggers into their sell system, drops it back down. You get the idea, right? Rinse and repeat, yo-yo circle. Yeah. We'll know that they're done when we get above 102, right? They've unloaded everything that they are looking to unload. Meta should continue to do really good. The news is still heavily negative against TikTok, but there's been some discussion, well, and it's not new, right? This discussion that They don't necessarily have to ban TikTok as long as TikTok can get sold to an American company so that it has American oversight and it no longer has Chinese influence. If it gets sold into an American company, Facebook's gonna freaking tank, right? Buy the rumor, sell the news kind of thing. So just kind of keep in mind if you're long Meta, because it just continues to do really good as long as this TikTok fiasco continues. Everything bad about TikTok pushes Facebook higher. Well, if TikTok becomes an American company, just the news of that announcement, this sucker's going down. So kind of keep that in mind. I talked about Facebook at the start of the year. It's one of the two contrarian plays of seeking alpha, right? And the articles came out like late December into January that this was one of the two where they were looking to go long as a contrarian play against the rest of the market, which is expected to be sideways through most of the year. So far, that's playing out really well. And it doesn't matter the narrative, right? It doesn't matter, well, it's TikTok news, blah, blah, blah. They didn't know. You're right, they didn't. But it was still on the long list. There'll always be a narrative that can be applied to a move after the move. Calling the move in advance, well, they did. So with this one, 210 is the level we got to get through. And keep in mind, there's still a big old gap at 220. This morning, we're barely up, but we are up again another half a dollar, right? So just a fractional amount. The thing is, it's inside day IX10 at this point, and we've got a nice slope across the bottom here. So we're kind of priming ourselves into this wedge. Just keep in mind, price patterns are going to take a back seat to news. So it wouldn't matter what kind of price pattern you have. As long as the news still puts TikTok down, it'll lift Meta up. $24.50. It's a line in the sand. We're already inside day breakout in PayPal from Friday, but we got to get above this 24.50, which is Thursday's high. And once we get through that, then we've got these two. The thing is, this low should not be broke again now that it's above it. So 74.32 in the pre-market. We're through it. It needs to hold it and not give it back. It could fade back to the close of Friday. $73.9 was Friday's high. There's just like a little bit of a wick there. 73.88. It could do that. Since it hasn't made it through this wick, it would still be acceptable to fade back and bounce. But if it gets through this wick first before the open, you don't want to see it fade all the way back to the close Friday. All right, Tesla's up nearly $4 this morning. Now $3. 3 and a little bit of change. 193.85. That gives us our inside day breakout from Friday. This isn't really a TRB setup, and That's not really a recovery candle. Not much. Not yet. Let's look at it on TrendSpider so we can at least see the pre-market movement. All right, so there's the same setup, right? Except we have the green candle because it's showing pre-market. So think about where it closed. First of all, that is a big concern, right? That big indecision candle. But tag on the moving averages, nice rally up. And then now in the pre-market, a continuation of that rally. There's a couple things I don't like about this. One, on the rally up, it didn't even get to 50% yesterday or Friday. So I don't like that. Two, we got below this really big green bar. We got below 50% of it. I don't like that either. We managed to rally back up, and it was trying to get above it by Friday at the close, but it didn't make it. It didn't make that 50%, and that's a really big deal. So this looks in the pre-market good so far, but there's kind of a line in the sand. So Friday's high, while a lot of other names already have a Friday high breakout, and some of them already have a Thursday high breakout, this thing still is sitting inside of Friday's price action. It's been a nice recovery, right? A nice bounce and rally in one smooth motion so far. But there's a whole lot of reasons to believe that it's not going to make it through this 198 area, and that there is a lot of liquidity sitting up here. That liquidity could even have been brought down. We don't know. We'll know as we get above that 195. $193.02. So Tesla's trying to get back up, and right now it is above this 50% mark. But the fact that it even went below it to begin with, right, dropped down and then tried to get through there again, it couldn't do it, and now it's trying again. This still looks like a short. And for a long play for me, it'd have to get over that trend line, this bigger trend line first. Looking at it on the weekly, you can see the dominant candle. And there's your zone. So it needs to get above 198.50 for a long play, which would also mean that it already has this trend line breakover. All right, bonds still heading to the downside. Pretty decent move in yields this morning. Back up to that 3.4. Now the ES pulled back a little bit on that news. But the VIX just really didn't seem to care. So it quit going down, but it didn't go up. Right. And it's kind of that reciprocation from the move we saw in the ES this morning. So the ES pulled back on that news, but this didn't go up. It just quit falling. And you can see even on the pullback from that news, the S&P is already stabilized around that 40-30 zone. You know, if we were looking at the kind of a higher time frame, and it's keeping this breakout, or at least it's trying to keep that breakout. So keep your eye on the VIX. We want to see that it resolves below 21. This is just a very minor little short-term box, right? And bigger picture, VIX below 20, you can get a little lax with it and say 20 flat, but I'd say 21 is a good start. If we can get the VIX below 21, you very likely can see the S&P get above this 40-40 zone. I really think it's going to take more than that for the dollar. So for the dollar, yeah, maybe even just getting back down to 102 would be a good start. We really need this dollar to come off, and the lack of movement, I don't think that's going to be good enough. I think we actually need to see it come off. Kind of stuck in this weird situation where we got yields up this morning and the S&P are up this morning. And what we've seen lately is this kind of odd situation, right? Normally, what we had been dealing with is stocks go up, bonds go down, or stocks go up and bonds go up. Right now, we're back to that inverse relationship, bonds down, stocks up. So that means stocks up, yields up. But that's only going to work until yields start getting into something nasty, right? So think about the 10-year getting above 3.65. Then we should start to see this disconnect again. on the TNX, that would be somewhere around Wednesday's high. I don't think we're going to get a lot of help from these tools. They're all stuck in a range, and they need to move outside of the range before the tools are going to start to even be effective. That goes for the VIX, the dollar, the yields. None of them are really helping us out, right? They got this zone that they have to get through, and until they do, we're not going to get any assistance out of them. So you can keep your eye on them. I would never say don't watch them. Just I don't think you're going to get much out of them. You might be better off just keeping your eye on the KRE, regional banks, and the NY Fang, which is, like the monsters of tech. When you already anticipate tech's going to be kind of squishy, not really helping us out. If they actually get into the game and start going up with financials, we could have a really amazing rally. So far, all of this is just being held up by financials, and that's not enough. So we need consumer discretionary and financials can carry the market, not really rally the market. We got 44% of the S&P up 0.5% this morning. Consumer discretionary needs to be a big part of that. And it's mostly finance. So if we don't have tech and we don't have consumer discretionary, then we don't have enough, right? Or on TradingView, it's called consumer durables, which Tesla makes up the biggest part of that sector. But what we're not seeing are the monsters of tech, so they really need to get in the game. The thing is, if we start seeing this capital rotation continue, then we're likely going to see a fade in semiconductors and tech, and I wouldn't short them, right? They're kind of exhausted, which is different than being a short. NASDAQ, 32% of the NASDAQ is up 0.5% this morning, including NVIDIA and other chip names like Microchip Technology. Yeah, these aren't the names that we need for a rally. All right, so keep your eye on the Bitcoin, BITO, KWeb, emerging markets. Maybe a little bit on the pot stocks, but I mean, they're just kind of an outlier. And that's the thing, right? We can hold the line with finance through the morning and then have tech come in the afternoon, and this market could just take off, right? That's all it would take. All I got to do is maintain this hold. But I'm going to keep my argument from last Friday. If we open gapped up on Monday this morning, then I would be bearish on the week until proven otherwise. I really wanted for a bullish move to see a gap down this morning in the indexes, and that's not what we have. Yep, range and chop until we get out of the box, right? And until we get out of the box, trades like what I put on last week. I used the MES just to keep some capital, right? Better than just sitting on the sidelines with nothing. 4,300 and 3,500. Those are the futures options that I sold last week. Yep. 4,300 call and 3,500 put for May. Right? And I left the June series alone because if I do get challenged and I need to roll, then I'll roll out to June. And a trade like that is basically asking the question, do you think we're going to get above 4,300 between now and the end of May? I don't. You think we're going to get lower than 3,500 between now and the end of May? I don't. So sell the May call and sell a May put. Depending on your broker and depending on the kind of account that you have, if it's an IRA account or not, or a margin account. A margin account could do this for about $1,500 in buying power. It could be less, right? It could be around 1,000. And an IRA account, a non-margin account, I think you would need closer to $2,000 buying power to do that. Still, it's not prohibitive, right? And it's a buying power restriction. If you were to sell an SPY call at, 430, you would need what, $50,000 buying power or more. Or if you were to sell a SPY put, say at 350, you would need, massive buying power to be able to sell a naked put and a naked call in SPY. But in the MES, less than $2,500 buying power restriction. You can use the ES. There's absolutely nothing wrong with using the ES, but it does take more buying power, right? Because this is a much bigger beast. But it'd still be the same trade, 4,300 and 3,500. I don't trade futures options on Thinkorswim yet. I'm still using Tasty for that. $350 for the put in credit. And a little more than 350 for the call in credit. Oh, excuse me, a little less, 262 max profit. Still for, a far out of the money trade that doesn't require a whole lot of babysitting and it's naked so it can be defended. You're not starting with a spread which has basically no defense to it. About $600. And we're not holding these all the way to expiration either, right? My goal on these is usually anywhere from 35 to 60%. I know it seems like a wide range for profit, but it depends on how close to the next FOMC we get before I pull these off, right? Because I don't want to hold them into FOMC. So however much profit I get between now and when we get too close to that. And all I'm doing here is just using some capital that is sitting in the account because there's really nothing to trade swing trade wise that I like until the S&P gets out of the box. I'd love to take some trades, Google, Microsoft, Apple, whatever, across the board. But I'm not going to because we're stuck in a box and there's just no good trades. So might as well do something with the capital while we're waiting, right? It's better than nothing. Everybody, be careful, be safe. Keep your eye on the people talking today. They very likely can influence the market a lot more than normal things that we're watching, right? The dollar, the yields, the VIX, they're all stuck in a range. So them talking can move those tools out of the range, which can then move the S&P. I'll see y'all tomorrow.